Welcome to Bears in Exile. Today is October 25th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Oops. Okay, well, interesting. We had theorized that there could be some reaction at the 200-day moving average. It certainly appears that that is the case. But we had also left the door open to a gap above it, and that did not happen. Um, we did get a downtick today in the short-term moving averages, giving us a target of 11,550, and we have 4 market days to reach that. Um, so that's nice. I mean, another 150 points just for a bubble corrective move, and then it can decide what it wants to do. I mean, by that time, the bearish bar will probably be completely collapsed. That 11,550 is still above the upper price consensus level, but um, we have been waiting for the hooks on the stochastic, and they are way overdue. Way overdue. So, are we going to get the move in the stochastics that we've been looking for since all the way back here? It's possible. Certainly, the 14-day RSI moving average is finally starting to run out of space between itself and the overbought condition. However, even when it gets to that, there is still some more room, as you can see back here. So, yeah, this move up may not be entirely done until the 14-day RSI moving average is finished, and certainly so far it is not quite there yet. So looking for that. We had noticed that the RSI was massively oversold last night, and it still is, even with more than 200 points down today. So that's great. Still have an uptick on the MACD. We do have a downtick on the histogram, and so that this is nice. And having a reaction rather than a gap, yeah, that's nice too. Whether or not we're going to get the turn remains to be seen. It's still too early. Even 200 points just is not enough to impress. But once we get to 11,550, should we get there, and I do think that we will, then we'll have to see what the alignment of the indicators is. Going to the 60-minute time period, we have been saying that we have divergence in in several things. The stochastic one was busted yesterday, but we still had it in the CCI, the RSI, um, certainly the oh yeah, we had to look way back here for the RSI one. Okay, so the RSI and the MACD histogram. So if it's going to do its repair of that, hey, great. If it's going to do a full repair of that, this has much farther to go to the downside, but it is still far, far too early. SPX, very nice. And you know what? I didn't even check to see if this was bearish engulfing. Let me do that real quick. Okay, so we have a bearish engulfing on the SPX, but we do not have a bearish engulfing on the Dow. The Dow is off by a point, breaking that, but the SPX was nice and gave us a bearish engulfing. So hey, that's something. Beyond that, we have a downtick today on the SPX, giving us a target of 12.14. And that would be another nice little move down. But should it get that, and it should, it's still not the end of the world. The bulls are not defeated. So I wouldn't read into that too much. If we do get the cross of the middle Bollinger Band, that will be something. But until we break the upper price consensus level right at 1200, this is still the bull's game. Still is. And while the news certainly is turning bearish today, tomorrow we could have another crazy story that changes everything. So we shall see. The VIX got above 30 once again, very important number, and we were talking about how it looked like a rejection from getting sucked back into the bar, and now, yeah, we got an uptick, but everything's so close, it really doesn't matter. It was almost completed intraday until we're able to get above the long-term moving averages and try to reform the bar and bust out of the lower price consensus level at 35. Um, I'm still not counting out the bulls. Certainly 14-day RSI moving average very low. It certainly is in a place where it should start to hook sometime very soon, but we don't know yet that it's going to do that until it starts to do that. So waiting for that. Stochastics are mixed, slow going up, fast going down, up on the CCI, up on the RSI, up on the MACD histogram, up on the MACD. So yes, this does look encouraging, but until the 35, I'm not counting out the bulls. Absolutely. Way too early. And we still have the major price consensus level way up here above 39. And so hopefully we'll get that. We should gravitate back to that. But too early. Too early. And of course we have the positive divergences that we've been looking at in the 60-minute time period, and it would appear that those are trying to resolve themselves, but they have a good bit to go before it is complete. So that 35 level, very important. And here on the 60-minute too, I mean, you have this prior peak up here at almost 37. We really would need to surpass that, break out of it, for a run at the previous high way up here at 47. But that is entirely possible if the world turns against the market, which really we should have a good retracement. I mean, we went 1,500 points, a 50% retracement of that is going to be 750 points, meaning that we would have 550 points to go, and that will put an entirely different spin on things. Most notably being, if it were to be the case, it will not bust out of the lower price consensus level. So this is for speaking on the Dow. So anyways, moving right along, TNA. We said that this one would be great if it were to break out. Certainly there was a little bit of damage done today, but nothing to write home about. I mean, we would need a break of the major price consensus level, a break of the lower price consensus level, and have a clear failure against the bearish bar to really get excited about this going down. And from the flip side, it is still very possible that we could have a bear flake fake out and bust out this previous top in short order and have it march its way towards the 200-day moving average. But we just don't have enough information. One day is not enough for anyone to get too excited. CCI ticking down, stochastics in a great spot to run down. 14-day RSI moving average still has room to move to the upside. Down tick on the RSI, down tick on the histogram, side tick on the MACD. We need more. We just need more. UUP. Okay. Well, we're saying how ugly this one has been. We've been tracking the 14-day RSI moving average. It's finally getting to oversold. Great sign for the bears. But we still do not have the tick up yet, and that is extremely important. Both the stochastics are in a great position to meet up with the 14-day RSI and march up, but the 14-day RSI still has some room to move down. So until it's ready, until it's all set up, I'm not going to get too excited. CCI very oversold, stochastics very oversold, 14-day RSI moving average oversold, RSI oversold, uptick on the histogram, downtick on the MACD. we need more stumbling out of Europe, you know, period. Um, FXE, miniature spinning top. Um, we have one break of the bearish bar by the short-term moving averages. Still have the middle Bollinger Band below them. We're still above the major price consensus level. We're still above the upper price. Nope, we're not above the upper price consensus level. Sorry. We're still below the 200-day moving average. And based upon the positioning of the 200-day moving average, the upper price consensus level, it sure seems like there is good resistance above us on the euro. And certainly I've been saying, the euro is too darn high, and it really should be in the 1.35s at least. CCI very high, getting a down tick. 14-day RSI moving average and the stochastics, perfect position for the rollover, but the rollover is not here yet. Can't detect that. Downtick on the RSI, downtick on the histogram, uptick on the MACD. This needs to change from a mixed bag to a clear bearish sign. And, with that other super meeting tomorrow, it's entirely possible. Maybe tomorrow is the turning point. But until we see it, until it's clear, these could hang out here for a week, the stochastics and the 14-day RSI moving average, before they get their clear turn. So that's why I am not super excited about this yet, although it certainly has great potential. GLD, fantastic move. This is our second VIX. We said double flat line, not looking good. Well, we have our fear going up, and gold is reciprocating. Certainly, if the dollar is going to go up, that is going to make gold cheaper. But as long as fear is increasing, fear trumps the dollar conversion, in my opinion. Hence the title Second VIX. CCI is very high. Stochastics are on their way up. 14-day RSI moving average finally getting underway. So that's a great sign. It'd be wonderful if we were able to get the stochastics all the way to the top and have them drop back down to meet the 14-day RSI moving average and move together. However, with the Dow and UUP, we saw the 14-day RSI moving average move without the stochastics, which is very unusual. And could we have that happen with gold? It's possible, but still, it would be very unusual for them to just get up here and stay. RSI ticking up, histogram ticking up, MACD ticking up. Very nice for gold. And if it's able to reset the double flatline into something that's positive, hey, that's absolutely fantastic. We have the major price consensus level above 175. Could we get there again? Well, we should gravitate to it if things were just natural. So that's great. We were theorizing before that if we were to have a breakdown in gold, we would want everything to reset to the bottom and hold the 200-day moving average. If we're not even going to do that test and just go up, hey, I'm fine with that. SLV also, nice move up. We have been theorizing that since we had this room between the essential flatline and the bearish bar, it was much more likely that silver would get a retest of the bar. That certainly seems to be the case today, but the short-term moving averages need to go up and touch the bar, not just the real body of today's candle. Very important. Also note that the top of today's real candle essentially almost meets up with this previous high we had back here. If we're able to get further movement to the upside, that will be a good catalyst for our bar retest. We need to watch and see if we are able to achieve full crossover and separation prior to entering the bar with the short-term moving averages. Stochastics marching up, 14-day RSI moving average marching up. We noted in last night's video that it was more underway than gold. Very high on the CCI. RSI marching up, still a little bit of room to move before overbought. Uptick on the histogram, uptick on the MACD. So to put into perspective, I've been thinking that there will be a move down. Certainly today is more than welcome, but it is still very early. And we shall see tomorrow. We'll see if there is some follow through or not. And there it is. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.